Good morning, everyone, and thank you for joining us today. I'm Praveen Paulos, CEO of Solution Technologies, and I'm excited to welcome you to this session on how organizations can use a business rule engine to automate and improve critical decision points in the lending lifecycle. So at Solution, we've built Decide, a business rule engine designed to simplify and centralize this decisioning logic, and we'll be sharing how it's being used in production by financial institutions. I'm also joined today by our guest speaker, Rakesh Das. You just heard him at the start of the meet. He's the Chief Credit Officer at Tyger Capital, erstwhile Adani Capital, who will be sharing his experiences implementing rule-driven decisioning across credit and risk functions and the kind of business impact it has helped deliver. We're delighted to have him with us. Thank you, Rakesh, sir, for joining. And over the next 45 minutes, we will explore how a rule engine can bring structure and agility to some of the most critical decisions taken in lending. Beyond underwriting, it goes to collections, payout calculation, incentives, and cross-sell, upsell to your customers. So we will walk you through real-world use cases where automated decisioning has helped teams improve their turnaround time, ensure consistency, and respond faster to these changing policies. Towards the end, we'll also give you a quick preview of how we are bringing AI into the mix, so combining structured rule logic and artificial intelligence to enhance this decision-making. Also, we'll keep a small time for a short Q&A at the end, so feel free to drop your questions in the chat as we go along. Okay, so we'll start with the loan journey decision points. So I've just tried to pick up a few stages from the loan journey. You can look at, and they're not in any particular order. It depends organization to organization how the sequence flows really, because you might have automated a few steps. You might need a few integrations in advance for this automation to take place. So it's not really in a sequence that every organization may use. So it starts off with the detailed data entry. That's the stage where either a customer or a sales manager is filling up the loan application form. You may also augment it with additional data that you get from outside sources like the bureau or bank statements, any other additional data that you pick up from the regulatories. Moving on, there's another stage called the quick eligibility check. So you want to do a go, no go. Your policy states that you cannot service a particular region or you cannot work with customers below a certain credit score or new to customers. So you might have some go, no go rules. So you want to do a quick eligibility check. If you're doing secured loans, there might be an asset valuation that needs to be in place. The asset could be a property, it could be a vehicle. And then you try and match a product that this customer is eligible for. Moving on, you'll have document collection, a bureau evaluation. So you might go beyond the score. You might take other parameters from the bureau, something like the active balances that are there, the active loan accounts that are there, or the inquiries that are there inside his bureau report. And basis all of this information, you end up taking a pricing decision. If everything's well, it's a straightforward policy. There may be no deviations, but if there are exceptions to it, you have deviations. And for other organizations that have matured in terms of their loan journey, they might choose to go an STP, a straight-through process, or do a manual approach. Again, whether you need to go with an STP or a manual approach can have certain policies around it as to what kind of loans can go through an STP process, and then a final approval level. Now, many organizations, depending on the maturity of their process, would have implemented some level of automation. What I've tried to do is, from these stages, try to put in green the areas where you can have a decision engine or a rule engine that gets applied at these points. So the first one, if you see out here, is a quick eligibility check. The example that I gave was about a go, no go scenario. So I'll just open up a sample. Like we said, we'll be walking through live use cases that are being used by financial institutions. So we've got something called as an eligibility rule set. And if you see, you can have conditions for eligible. It's as straightforward as putting a variable, putting certain conditions out here. And you've got multiple conditions in play out here. And if it's not eligible, you've got a different set of conditions that are there. If I take you to the simulator, you can see that, this is the kind of information that would come from your detailed data entry or the augmented data that came from external sources. And then you can test your rules immediately. Okay. So here, person's not eligible. I change the value that comes from here, and you can see suddenly that there's a tick mark out here. And you can go into each rule and check which of those rules matched, right? So as and when you're building your rules, now this is not something that you could do, without a rule engine. If you were doing it in a standard loan origination system, you're explaining it to developers. Whereas here, the business user himself can look at how the results have come, and you can check whether it's a match or not. Additionally, and this applies for all the rule sets that you will see in the system, I could have easily gone and changed a condition. So that's how straightforward it is. Let's say I say only if years in business is greater than equal to 10, then it should be a match. You see the match has gone away, and I put it as 12, and you can see that it is now eligible. So this is an example of how it could be used for a quick eligibility check, whether you want to do a go, no go, and use your resources accordingly. It can also be used very well in asset valuation. So when it comes to vehicles, you've got a concept of a blue book. You can use that, or if you've got pre-approved properties in terms of an asset, so you can check things like, whether this builder is already registered with you, whether the manufacturer, make and model of the asset is already in place. And you can also arrive at a valuation, because the value of the asset itself may change by region, by if it's a used vehicle, by the number of hours it has run, the number of miles it has run, or the number of years, how old that vehicle is. All of these rules can be decided through the asset valuation. We move on to product eligibility. Now, when the check is done, the asset is valued, you want to give certain product recommendations. So is this particular customer eligible for a particular product? So again, we use an eligibility rule set out here. This is an example of a credit card product recommendation. And you have certain criteria out here, okay, like the applicant age, city tire, income, customer category, or credit score. Okay, and that's for a platinum gold card. There's a different set of rules for a gold card, and there's a different set of rules for silver card, right? Now, similarly, you can run that. If you see on this would come from the application form. And if I evaluate it, you can see that this person's eligible for a silver credit card. If I changed values, this is kind of simulating a different application form. You can see now this person's eligible for a gold card, and you can see all the criteria have matched, and that's why they're eligible for a gold card. So that was product eligibility. Now in document collection, there are some cases where things like a document checklist itself can come from the rule engine, but we've not marked that in green out here. And then there's bureau evaluation. Bureau evaluation was when you get the JSON or XML from the credit bureau and you want to extract values out of it. And beyond simple values like scores, you can go and extract values of all outstanding balances of your current loans. You can check the number of inquiries. All of that can be done within a rule engine itself. And you can have a full scorecard that comes out using this. Another area where you can use this is the pricing decision. So you want to decide, what's the min amount, min or max loan amounts. You want to decide the band for rate of interest or the processing fee that needs to be taken, which can be done through a decision table like this, right? So this is another component that we have in our system called the decision table. And you can see that you're very simply writing these rules out here. If the monthly turnover is greater than a certain value, the debt to income ratio is less than 40, total score is greater than 70, then the rate of interest should be something. And similarly, the processing fee. So you're basically, based on the risk profile, you're deciding the pricing that should be offered to the customer. If you need to simulate that, so you've got your values out here, you evaluate, and it goes and picks up the right rate of interest, and processing fee out here. So this is what will go back into the journey, be it the LO or even a digital onboarding journey. So that's how pricing can be done. Then comes deviations. Again, for deviations, we've got another component called the decision rule set. And you can see now in this case, it's not just about deviations, it's also about showing all the deviation rules, this particular configuration. So if I take, this one, this is about the product where I want to show it in green and amber, or business constitution, which is green, amber again, right? So amber would mean there is a deviation, green would mean there's no deviation in this particular case. And if I want to now simulate this, these are the form values that came through, and I want to evaluate it. So these are the outputs, that came back from there. And in this particular case, all of them are green. So what I'll do is just to simulate one of them as red, I'll just check, let's say business vintage less than 3, amber, sorry. I'll take the values, business vintage, I'll put as 1. And you can see that the risk category for business has now become amber. Right? So it's that straightforward and simple control that you have over the decisioning that comes from an engine like this. And similarly, where you might have a policy for STP, you might have certain rules out there whether this particular case can go through an STP process, manual, and then you have the final approval. So as you can see, most of these areas, so even though I did not mark document collection in green, we have instances where people use that for the document checklist. I have not marked detailed data entry in green. We have companies who are even using the rule engine for validations that happen during the detailed data entry level, right? So giving them a lot of flexibility because there are about 300, 400 such rules or validations that are supposed to come there. So to ensure a quality application form coming through at the starting stage itself, people have been using it even at these points. So practically every stage, you can make use of the decisioning engine. Right. Now, in my experience, okay, before going to that, we'll now look at decide and give you a high level overview of that. So while I was showing you the actual screens, this is our product Decide, which is the business rule engine. And what I want to talk in this session is more about the use cases, but I thought I'd give you a quick overview of what the system is really capable of, because that's the only way use cases other than underwriting can be used within the rule engine. Right. So what you see on the left-hand side is the rules management part of it. You've seen how in a very simple way I could configure those rules, make changes to it. And we've designed it in a way that it's simple. It's something that business users can author. Now, the typical flow is the business users have created a policy document. There's a development team or somebody who's understanding the policy document and then coding that into their applications, right? And it's just like a Chinese whisper, right? When it keeps passing on hands, the final implementation always has certain issues, and the time to stabilize all of that is substantial. So our thought was always that the business users should be able to view it, author it, and collaborate amongst the subject matter experts itself while doing the rules management, not just have it with the developers. And the IT users can help with the management and final deployment of these rules. What you see at the bottom out here are the various use cases: customer onboarding, customer relationship management, then in core banking or debt recovery. And on the top, what you see are the various rule components that Decide hosts. All right. One of the reasons why we are able to make these changes in the rules really fast is there's a rule engine, there's a set of rules and how it's supposed to be executed. And on top of that, what we've tried to do is abstract it into industry terminologies. So I'm pretty sure most of the audience here have heard of something called as a decision table. So you're maintaining a lot of these in Excel sheets, which is pretty much your decision table. or you've got Excel-based scorecards, right? So what we've done is built those components in a way which a subject matter expert can relate to. So these are some of the components. Rule sets is one what I just showed you for deviations. You've got decision tables, which we saw in the pricing table, scorecards. Any kind of scorecards that you've got can be built into this. Decision trees is a visual representation of your decision flows that you can have on the system. I'll show you that in one of the use cases. And then you've got policies which stitch all of these rule components together. So at the end of the day, it's still a workflow. For an example, you want to query certain variables out of credit bureau. Then you want to run a decision table out of it and you get a pricing. And then you want to probably calculate the final EMI based on the loan amount, right? So these are all steps that are stitched together and that forms your entire policy. It's also got a financial library inbuilt into it, which has got about 100 plus financial functions. All your Excel-based calculations are possible in the system. And to keep in line with what's happening on the AI side and to have predictive models, if you've got a team that works on machine learning, which means works on your data and builds models based on your data alone, then those models, predictive models, can be ingested into Decide, and then you can have the benefit of having two comparative policies running, which is one your structured policy that you've already designed, and second your predictive ones, and then use the best of both while eventually running your policies. Data connectors is another, I'll say, fairly unique proposition. So if you want to there's a lot of data now that's available through APIs, either through the regulatory, either through fintechs. So if you want to connect, you send a application data, you want to connect it now to fetch the credit bureau data, it can do that. It can go get the bank statements or the analysis of the bank statements. It can fetch ITR. So all of these data connectors, or even fetch information from your existing systems. So you've got your core system, you want to run rules on, okay, does this person already have loans with you? So you can go and fetch all that additional data and then use them within your rules. So that's what data connectors in a very generic way allows you to do this. And finally, I'd say the more important part, which generally gets missed out and which you would not get unless you're using a rule engine, is monitoring the output of your rules. Right? So you want to see every rule that got executed, probably against a loan application number or an application form number. You also want to be able to explain why this decision was taken. So you need very micro level details as to every step that got executed, like you saw in the eligibility rule set. If I said that the gold card, if a customer is eligible for the gold card, then you could see which particular rules matched and due to which they got that gold card. So you can keep monitoring it, and organizations will change their priorities from time to time. So if you're a new organization, your priority might be to have as much approvals as possible. After a certain set of years, it might be to have a better book. So which means you don't you reduce the rate of approvals and then you see to it that you have a stronger book, which means you have more risk control in place, right? So is your policy helping in that sense is what you can see through the rules monitoring part of it. So that's a high level overview of Decide. And now whenever I have spoken to people in the lending industry, generally people think of rule engine, and that's the primary agenda of this session. People think of rule engine as underwriting only. Okay, that's the main area that they're looking at, and the digital journey. But let's look at a few use cases beyond underwriting, starting with collections. So you want to optimize your collection strategies with a rule engine. What are the challenges? So in collections, I mean, in the past, it's been always that way, that one size fits all approach. Over time, with regulation as well as a sense from organizations, people have realized that you can't have one collection strategy for all your customers. You need to handle them differently. You need to have a different profile. And based on the profile, you need to have a certain approach as to how the collection or recovery is done. So, and another challenge is there's a manual bucketing. How do people fit into certain buckets of low risk, medium, high risk? Then you've got static workflows, as in the strategy itself is static in nature. Should I send an email? Should I assign it to, an in-house recovery person, an external recovery person? So these are static defined workflows. You're not really changing it per day. And all of this results in delayed actions and high delinquency. So people who run it manually, obviously, they kind of run it at the end of the month, once in 30 days, twice in 30 days at best, depending on the payment cycles that are there. And that results in delayed actions overall and a high delinquency. So what's the solution and how a rule engine can really help? You can get dynamic bucketing happening through that. You can tailor your collection strategies. So based on the bucketing that happened and the profile of the customer and other aspects like which channel the person responds to more, you can have a more tailored collection strategy. You can have real-time case reassessment, so you don't have to wait for the end of the month. You can run this case reassessment based on events that happen in your system, or you can even run it at the end of the day so that the bucketing and the strategy itself changes on a daily basis. And then you can have automatic feedback loops. Which strategy is working for you? What's the success rate? And then accordingly keep improving your collection strategy. So I'll just show you very quickly, and that's the part I was talking about in a decision tree, how easy it was to set up something like that. So in collections, I mean, these are just some of the parameters. You may have more parameters, but we're looking at, let's say, balance category, the months on book, repayment history, and the contactability. Now, if you see, you start out here, if the balance category is low, then the risk level is low. And you take a more complex one, if it's medium and it's medium months on book, the repayment history has been clean or irregular, and contactability is reachable, then medium or high risk, right? So if I create a tree like this, I go to the simulator, and these are my values that you'll get, per record. And it immediately says, the risk level is a medium risk. And now you can apply the right strategy because it's a medium risk. And you can have other parameters further than just the risk level. I've just shown a simple risk level. You can have other parameters also around this. If my balance category, the first one I think was low value, if I put that, you can see immediately that the risk level is going to low risk, right? So this is how it can be used in collections. And the benefits obviously are faster collections and improved recovery rate. So one of our customers uses this, get about 75 to 80% of their collections during the first 3 or 4 days, which used to earlier get assigned to people. Now they do those collections over telecalling because it's a low risk customer. They just get them to get that collection really fast. And it's smarter use of resources. Earlier, all the incentives for this recovery used to go, to the people on the field, irrespective of it being a good customer, a bad customer. Now, most of that work is done at the telecalling level itself, and you're making better use of your resources. So your field people can be for a little more medium or high risk kind of customers. And then you can easily update your strategy. So it's a matter of going and changing that decision tree, changing the values out there, adding a few more branches, and you can change how your bucketing is done or how your strategy has to be changed over time. So that's one of the use cases that we wanted to talk about. A second one is payouts or incentives calculations. So you have vendor payouts. So you've got a channel, you've got a lot of channel partners. So you want to do payout calculations there. You've got employee incentives, and as you mature as an organization, these rules get fairly complex and are prone to a lot of errors. So what are the challenges? Like I said, one, there'll be complex manual calculations, a lot of ifs and buts and conditions when it comes to incentives, right? This is prone to errors because somebody is doing it through Excel calculations. There's a lack of transparency there. Nobody knows how that final output really came about and how do you double check that. And then delayed disbursements. So today, the world is a little more focused on ensuring that these incentives reach out on time, because that's a motivating factor for anybody, be it a channel partner or an employee. So how can a rule engine really be used out there? One, you can check whether a transaction is eligible for an incentive or a payout. You can have fairly complex target and incentive slabs. You can have things like payout capping done out there, and then create a very complex incentive policy that you want, as complex as you think your system would require, can all be built on this. Again, here I'd like to show you a solution. So this one's an incentive policy for employees. So if you see first, there's a decision table for the monthly sales targets. So depending on the level of the employee and the location, you can have your sales target set out here. So on a transaction, it will first identify that. Then, if there's a target for new joinees, what is the target multiple that is set for them? And this one, I think, is a nice representation of also how I said a policy stitches everything together. So you've got two different decision tables. So it's, smaller components which are very manageable, right? And then you identify the percentage that is there, the incentive percentage, how much is it going to be? And eventually for new joinees, month 1, month 2, month 3, because you have an initial, the honeymoon period, so to say, for sales people. And that's how you can do a calculation. I'll just simulate this. So you're taking the level of the sales person as L1A, location is Mumbai, you see a new joinee, and the date and the sales achievement that you had done, which will come from some external system. And you evaluate that, and you can see, it'll try and get the target, what's the multiple for it, what's the max BSM incentive, and then eventually the incentive percentage that it falls under. Post this, the calculations are going to be straightforward. So something as complex also as the incentive policies can be very quickly built into this and used. So we've got certain companies using it for partner payouts because they've got different payouts. There's complexities about it's a festival season, which is starting now, right? And during these festival seasons, you want to motivate your sales team or partners more. And you've got certain campaigns running for 10 days. So you've got additional incentives. So it can club both of those incentives. All of that in a very transparent manner set up inside a rule engine, right? And the benefits, faster payouts, because as and when the transaction happens, it can run through the rule engine, calculate the commission then and there. Error-free calculations. So once your rules are set up, you're almost 100% sure that nothing can go wrong with the calculations because there's no manual intervention. Motivated team, because they can see as and when they do business what's the kind of reward or return they're going to get. And if you want to change anything, it's fairly easy. Again, if you want to change that decision table, the final incentive structure, you just go to that table and you change the values out there, and you can do those updates very, very fast. So this is another use case. And then our final use case that I wanted to speak of today is about cross-selling, smart offers and product recommendations that you want to do. So, when you're giving out offers, you've got campaigns running, but are you smart enough about the campaign? Are you hitting the right audience with that? So what's the challenge? Your offers are generic. So you came up with a Diwali offer, you probably blasted it to your entire customer base or did a very small segmentation and did that. The customer segmentation itself is static because you might want to segment the customer based on, again, continuous events that happen in your organization. So EMI misses or the person's prepaid the loan. All of this is a little more dynamic in terms of the customer segmentation. You don't want to just segment the customer and leave that on for 2-3 months. And then there's lack of explainability why you did that. So when we started our business, we had this company. I'm not sure how many of you remember. It was called Planet M. Okay, and I was surprised how they did campaigns. We had this product for SMS, and how they did campaigns was they had us send SMSs to all numbers because you could predict the mobile number series, right? You knew 98200 is for Vodafone. So they'd take 98200, take the last 5 digits, track that in Excel, and then say, send it out to these 3 lakh numbers. Okay. The next day they would send out the next sequence in that to the next 3 lakh numbers. And this is how they did. So you can imagine how much wastage, how much time and cost has been spent doing something like that. And you don't want to do, you may not be doing something like a sequence marketing, the way I spoke of. But even blasting it off to your entire audience may not be the right way to do the cross-selling and upselling. So you can have that also built into rules because there are certain rules built out there. So this is an example of somebody who's doing um, insurance. All right. So now we have a customer. What they've done is you've pulled the credit bureau report when somebody applied for a loan. One of the elements in the credit bureau report is if the person's taken an auto loan, right? Now, from that auto loan, you can judge that typically auto loan first insurance would be a 1 year term. So you know from the date that the person's taken the loan, he is an insurance candidate 1 year down the line, right? So that's a cross sell. You went for loans. Now, this is a DSA, so they also do insurance. You can very well go and try and approach that customer 1 month or 2 months in advance because now you know that his insurance is due 1 year from now, even though they've not taken the insurance from you and you got this data from somewhere else, which is your credit bureau report. Is it allowed, not allowed? I'm not too sure from the bureau guidelines, but it gives you a good example of, based on the data that you have, which is gold, how can you really make use of that, run rules on it, and come up with cross-selling and upselling opportunities to your customers. So the solution, you can have eligibility rules. So you've got your entire customer base. Is a customer eligible for a set of products that you want to cross-sell or upsell? And contextual timing. You don't keep blasting it, right? Like I said, in 2 months' time, the insurance is going to be due. So renew it at that time. Somebody's just prepaid a loan. Do you want to give some top-up offers? Or there's just 2 months left in a person's loan. Do you want to give a top-up offer? You've just given in a property, you've given the last disbursement. So do you want to give a home improvement loan? You know that the person's now going to get into the interiors because he's going to get possession soon within the next 6 months. So these are the kind of things that you can do. So that timing is very, very important, right? If you're there at the right time, then the chances are higher of getting the customer. And then the channels, like I said, will the person respond in SMS? Look at his contactability history. Will he be better on calls or any other medium? So what you're doing is you're personalizing offers. That's what the solution is, right? And the benefits, you're getting higher conversion rates, lower costs spent on your marketing. So your customer acquisition cost is definitely coming down, optimizing the resources, and you've personalized all the offers. So these are, 2 or 3 use cases beyond underwriting for which a rule engine has been implemented at various places. Whatever I've shown you so far are live implementations. Right. So we've got Mr. Rakesh Das, who's a guest speaker. He's got about 20 years or more in lending and credit. He's led decision-making transformations for banks, NBFCs, and fintechs, and currently leading the credit strategy at Tyger Capital. He's passionate about using technology to create smarter, scalable lending systems. The first time I met him, I was pleasantly surprised how he could relate. A rule engine can be used for partner payouts. And I would now like to invite him and ask a few questions in the interest of all the audience here.
Oh my God.
We can see you. Thank you very much for
Thank you.
Joining the session today, Rakesh. I'm sure the audience would love to hear from you and learn from your experiences.
Sure.
So we'll have it more like questions, Rakesh.
Sure.
So the first question is, what prompted you to use a business rule engine in your organization?
Okay, so let me just start with saying hi, everyone. In Tiger Capital, it started with a passion of getting paperless system, into the entire lending space. And that point in time, BRE was a buzzword. It got very attached to the, fintech, sounding fintech world. So we started with that. Okay, it started with something like, let's do this. We want to be a fintech guys. We want to automate everything. It started with that. But as soon as we got this implemented, we could see there are a lot of things we can do through the BRE process. Uh, Initially, we started with you know getting deviation captured, because what was happening was, when RBI comes for the audit and all,
Yes.
the credit manager has missed to capture the deviation, and that becomes a audit point going forward. And we are human centric organization, and every organization will bound to do such mistakes, manual mistakes. So first of all, we started doing it to use this to capture all the deviation that can be in a case. We started with that.
Okay.
Then what happened is, since we were very dynamic organization and things were changing very rapidly, the policies, the processes, because new people were coming in, we were setting up new businesses. So coping up with IT team, because IT team do require a lot of resources to develop whatever workflow that you want to build.
Yeah.
But at one level, you say, "Ki boss, I don't have that much of time," right? So, and at the same time, suppose you build something in house and you don't have the capability within your product team to manage the complexity, and you have to depend on IT team to write each and every change that you want to propose, it becomes very humanly impossible to manage that. So I think second, what we used was that only, wherein our own team write the changes in the policies and the processes, put that into the BRE, so that it becomes a seamless, transition. Then, of course, the risk management, the creating scorecard, collections, simulation. There are a lot of things that you can do. Currently, we are not using it to the T, I would say. But yeah, there is a lot of opportunity wherein you can use BRE to an extent of your imagination.
Exactly. Yeah, I mean, this session is held exactly for that reason. It's not only about the underwriting, like you said, deviations, but that's always a start, and then it moves
Yes,
forward from there
right,
once you see, taste success out there.
right.
So you touched upon, so what's the kind of business impact you've seen? One, you spoke of, doing faster policy changes. Any other business impact that you've seen that this rule engine has, enabled for you?
Uh, of course, I mean, uh, I'm sure most of you know Tiger Capital. We are into mortgages, so MSME, affordable housing, and farm loans that we are into. And in last 5, 6 years or so, the market has become so much of competitive. If you delay by an hour, there is a possibility that somebody else could lend to that customer, because now customer has a lot of choices to experiment with.
Right.
So the biggest advantage that we saw is on TAT.
Okay.
And to everyone's surprise, when I quote this number, it looks very impossible. 83%, 88% of our cases get decision either on day zero or day one.
Wow.
Okay. And I won't say ki that's 100% because of BRE, but yeah, BRE has a larger role to play on that. That's one. Second, I spoke about it that, in terms of our audit finding of errors, missing deviations, etc., etc. Those were reduced. The third was basically the risk-based pricing,
Okay.
because RBI or any regulator will speak about that how you are pricing differently to the various risk category of your customers. BRE helped us a lot in this, wherein we have our base rules which were written, and we have a product pricing range, and basis your categorization on the risk side of it, you fall into a particular pricing zone, right?
Right.
So that helped us a lot. And of course, the governance, the risk framework, actually you can improve a lot while you are working through BREs. So I think these were the visible changes that we have seen. One more thing that you talked about it, you touched upon it, is collection. Collection has two component to that. One was the communication to the borrower. So if somebody miss EMI, you have a auto trigger of SMS or WhatsApp goes. If
Yeah.
somebody miss 2 or 3 installments, there is a legal notice or loan recall notices that goes automatically. You don't have to depend on downloading data and those stuff. The second is basis certain parameters and past behaviors. You decide this is my soft bucket, this is my hard bucket. You allocate cases basis your logic that you have built over the years. Okay,
Right.
that becomes very seamless. So that's another advantage that we saw.
Okay. Great. So, and you know, if you had to look at what's the next top use case that you think Tiger Capital would want to, either plan for a BRE, considering that you've already walked the journey, you've got so many years of experience, you've automated a lot of things. What's the next top one for you that you would want to use for as a use case in Rule Engine?
I think uh, something which we are not doing, and this applies to almost all the lending partners, except for few like Bajaj who does it very well, is the cross sell. Now
Okay.
we have got 4 or 5 products, and if you see, 80% of the customer would be very unique in the nature. But it doesn't mean that somebody who is buying tractor will not need a home improvement loan or a insurance or a MSME working capital, etc., etc. It might be by himself or to his near family members or extended family, right?
Right.
I think something which we would like to use this very effectively is on the cross sell, because this gives a direct bottom line without acquiring the customers, and you don't have to break your head over it, right? You write your rules. You know that this is the customer whom you can sell a home loan, you can sell XYZ, whatever. And I think this will be a game changer going forward, that in a state of organization where they want to evolve from one product to another,
Yeah.
this may be one area wherein a new product introduction to their segment or a new segment can open up a door for many organizations. That's I see. But
Very
in Tiger,
interesting.
we would like to use it for cross sell definitely.
No, no, very interesting. And the name also you took relates very well to me, Rakesh sir. So about 4 months back, okay, we met Bajaj, and this is exactly what they do. They've got a customer base of close to around 10 crore.
Yeah,
Every night at 10 o'clock, they run their cross-sell, upsell policies on that. Within 1.5 hours, they get the outputs, and that's how they send out the personalized offers.
exactly.
So I was really surprised, and that's when I checked their customer base, because he said, because it's unheard of. Okay, they're talking about 10 crore customers and running a set of around I think 10 or 15 rules on them in 1.5 hours. Okay,
Right.
and when my team came and asked me about that, I said, are you in your senses? What you're saying is you want 50,000 customers done per second, right?
Hmm.
And they've evaluated about 20 odd rule engines. And the challenge was, if you can match that, then you can come and show us what you have. Beyond that, you
Right.
cannot do it, something like that. And we managed to do that for 10 crore records, obviously with 4 rules or 5 rules. We did it in 40 minutes. So that's why I could relate so well to this cross sell, upsell, because it has to happen fast. It has to happen every day.
Yes,
You don't do it at the end of the month.
exactly.
A very interesting use case. And like you said, it's straight bottom line. At the end of the day, anything that brings business, that's easily sold to the management, the board, everybody.
And more so, this becomes very pertinent to us because end of the day, every organization, lending organization are driven with ROE and ROA.
Yeah.
And if you can bring fee income, cross-sell income, which directly hits to your bottom line, that has a substantial impact on your ROA.
Okay.
And over a period of time, it get valued by the market also. So yeah,
Yeah.
why not?
Interesting insight. And a last question, Rakesh. there are
Sure.
audience out here who are either evaluating a BRE, using a BRE. In your experience, what advice would you give when evaluating a BRE platform? Any things that you need to look out for that, these features should be there? What are the parameters on which you would start evaluating a BRE
I mean, see, unfortunately, most of the organizations start with the cost.
platform?
Cost is definitely one thing you should keep in mind, but that should not be the deciding point. Uh, and I would say that if I have to look back and decide on a BRE partner in our journey, uh, one which I touched upon, uh, something which is very flexible in nature, something which can be handled by my product or business team very seamlessly. I don't require any coder or a IT guy to come sit with us for a day and put out those rules. Okay,
Right.
that's one. Second, once you write the rules and everything, it's easy to deploy. It should not happen that you are doing UAT, then it goes to production, people finding it bugs, then it comes back. No, no, no. I don't. It's not a software implementation. It's
Right.
simple business rule engines. Okay,
Right.
and business rule engine doesn't require you to go through all these cycles.
True.
So I talked about ease of business team, ease of rule deployment. It should be flexible enough. Like suppose today I'm doing mortgage and home loan, and tomorrow I want to do insurance cross sell or a gold loan, right? It should permit me to use this platform or to write my own rules.
Rules.
That's third. Then I would say that it should be scalable,
Yeah.
because unless you restrict it to a small pocket wherein you say, I'm only using this to new to credit customer, but will not use in salaried, will not use in SNEP, it doesn't make sense. Uh, and the fourth and the most important part is, right now every organization have become so data driven that, and it has an impact also, that everything that you want to do, you want to test your own hypothesis basis your previous data. I think any BRE which doesn't allow this to
Testing.
simulate your own environment, you should not be going ahead with this. uh,
Okay.
so this becomes very, very important. And of course then you're convincing your CFO about the pricing. I mean, that's a separate discussion altogether. But I think these 4 5 things that you should keep in mind while you choose any of your BRE vendor.
Okay. And great pointers, Rakesh sir. Thank you very much for that.
No, no,
So,
absolute pleasure.
yeah, I'll just move on very quickly to the last part of this session after before the Q&A,
Sure.
which is this is about how artificial intelligence can be used in decisioning. Okay. Once you've seen your BRE, you've configured your BRE. There's something called as the policy. If somebody wants to understand what has been written, a new person comes, it starts growing complex over time. Though we showed you cases where you can have you can have it made into smaller modules so that it's easier to digest and understand. Where is that entire policy? I'm not sure if every organization is able to maintain that in a very systematic fashion and versioned and well documented. That's one place where we see the use of AI. So you've got all your rules and everything configured. You want to come out with very neat documentation on it. That can happen. So I would just very quickly like to show that. I'm just logging into this side. And so what we've done at our place is we've also integrated with something that's called Decide GPT. I'll just take the same policy that I showed you, which was the sales incentive policy. And it is this one. And I go to the documents. Sorry, I just Go to the document section, and I have something called policy writer out here. You see, it's just created a JSON file. I will now download this file. Now, this is our ChatGPT decide that we've got. I upload that same JSON file out here. I mean, later on, we would integrate it directly into decide and say, create a structured policy document. Look at how easily using those rules that were just configured as tables, all of this description is not written out there. And it comes out with your decision tables, with the incentives that you saw as per region. And it creates your entire documentation on that, with the caps and everything in place. And your booster payouts. Right. So that's one area that we've been playing around with how to use AI, because understanding this entire policy is really easy. Now, another part which people say low code. One of the areas where we see this low code itself can come through AI tools, okay? Because otherwise you'd need a developer to help you with that section of a rule engine. So wherever there are custom functions to be written or extracting from a civil report for these kind of areas, can AI using natural language, right? I just ask it a question saying, get the score out from this civil report, right? Can that be an instruction into the decision engine? And a third area where we see is image analysis. So we've got a lot of requests, like for property, where there are photos taken. You have certain parameters about the property scorecard, which is talking about the construction quality, the neighboring areas. Is there a fence around that property? All of these can be analyzed using AI, the Gen AI that we've seen today, and everybody, seems to be adapting to it very well. All of that can be taken out as, I'd say, values augmented on top of all the other data that you've collected. So you're getting intelligence and information from these images, and that can be used later on in your decisioning. Right. So these are three areas. I mean, we will have a later session where we can show you more deep dive, I'd say, use cases of how they're really used. One I just showed you was the policy writer. I'm pretty sure that's a very, most people we've shown it to have loved it as to how easily it can build that entire policy document. Sure. All right. So thank you very much, everybody, for attending. And I hope there was a learning for everybody as to the various use cases. And we hope to do more sessions like this and invite you all again for sessions like this. Yeah. Thank you very much for taking the time out, everybody. Bye-bye.
Thank you. Thank you very much, everyone.